Just a quick introduction to Climate Collective and the work that we do. I'm just going to quickly share my screen. Okay, can everyone see my screen? Okay, great. Great. So Climate Collective is a not-for-profit. We largely support climate tech entrepreneurs and climate tech startups. We focus on the climate tech sector specifically. And in the last 6 years, we have supported over 720 startups across around 45 accelerator programs. We see a lot of startups in energy and waste, mobility, of course, but we also support other sectors, natural resources, clean air, clean water, clean industry, also carbon tech. So we have programs across a startup's life cycle. So right from the entrepreneur stage to incorporation to pilot connects, investor connects, and so on. The collective was started by Pratap and his brother Pramod. They were both clean tech entrepreneurs themselves, and they worked in the solar and wind development space. So we've been around for 6 years now, started off with the first solar hackathon in 2016, and we've been growing ever since. We look at India, also look at other South Asian countries, Southeast Asian countries, also done programs in Africa. Just a quick overview on what we do exactly. So we have entrepreneurship development programs where we have capacity development programs with a special focus on women. We also have later stage accelerator programs, and the key areas of focus here are on mentoring, investor connects, even corporate connects. And another area of focus, which we're increasingly looking at last year onwards and going forward, is the capital ecosystem. And around all of this, we also have other community development efforts to bring the various stakeholders in the ecosystem together. So just to deep dive on the three earlier areas of focus that you saw. So on the capacity development side, we have Climate Startup School. On the accelerator side, we start off with the early stage programs called Climate Ready. Here, there's a special focus on women, special focus on students. Climate Launchpad is actually one of our flagship accelerator programs, which we do in partnership with Climate Cake from the EU. We also have Climate Runway, which is post-POC, and we have Climate Takeoff, which is our pilot stage, deployment stage accelerator. And on the capital side, we have Climate Seeders Club, which is a new exciting crowdfunding equity platform that we're piloting this year, actually. We have Climate Angels Network, which we launched last year. And this is a support syndication platform for investors who are, and this is largely all growth stage capital. We're looking at the early, across the early stage spectrum of investing in climate tech startups, right? And then we have Climate Seeds, which is our early stage fund. We launched last year as well, and we will be looking to deploy in a couple of months. And on the community development side, we have a bunch of different things happening. Climate Startup Week is one of our flagship annual events. It's coming up in September. We also hold a lot of workshops. We launched our first climate hub in Goa last year. This is a co-working space looking to increase this and expand this year. And we have Climate Jobs Fair as well to bring the community together. So that's a little bit about what we do. These are some of our notable partners. There's New Energy Nexus. There's Frontiers Lab Asia, which was actually funded by DFAT, the Australian government. Incubation Network, which is started by the Circulate Initiative. And this is our team. I think some of us are here. You will see them on the screen. Little over 2 dozen right now. And yeah, that's about it. So I'm going to stop there and maybe let each of the speakers introduce themselves. So maybe Mr. Sanand, you can go ahead.
Thanks, Ashwin. So Yeah, I am. Hi guys, hi everyone. So I am the co-founder and CTO at Climate Connect, which is like Climate Connect Digital in its new avatar now. Background about myself: I did my master's in electrical engineering, and with a research stint in cryptography. After which, I joined Symantec, worked there for 3 years, and then worked for 2 years in Goldman Sachs in Bangalore, building the trading systems. So completely techie all my life. Then in 2012, I met Nitin, who is the CEO and founder of Climate Connect. So he had ideas around this, carbon markets and the information business around the carbon markets, especially targeting the California region. So we built our first portal. I joined hands with him. I built all the tech backend for it and so on. We got that product off the ground. Then and we were always motivated to do more because we were always big on the sustainability angle, the net zero angle, and so on. So we sort of evangelized that everywhere we went for all our pitches as a startup. So in 2014, we sort of pivoted ourselves into the Indian power markets, and as you know, that it is quite a vast sort of a sector in itself. So we got a lot of data feeds going on from different places, and we started thinking, what can we do with this data? That's where we sort of embarked on a new journey. This pivot happened where we sort of went into the AI ML space. We started applying these technologies because that was the sort of a inflection point for the deep learning technologies across the world. So we started looking at ML very seriously. We started picking up a few problems along the way, and we first picked the IEX price forecasting problem as a problem to go for. And then we sort of developed solar forecasting, wind forecasting, and demand forecasting engines. Uh, and after developing these engines and iterating on it, we built softwares around it, which we then started pitching to different renewable IPPs or distribution companies. First of initially we got good traction with private IPPs and private discoms, and later on, once we set ourselves in the field, we grew our portfolio organically to currently we stand at 10 gigawatts renewables portfolio and almost 40 gigawatts utilities portfolio under our management of software. So, basis all this, we got acquired by Renew Power. They showed interest in us, and back in June 2020, we signed the acquisition. Now I think after acquisition, I think the real game starts. It doesn't end out there. We have now got even more ambitious targets from Renew, and everyone knows that Renew is a very forward-looking company in the entire renewable and net zero space. And we are really looking and there are various sort of opportunities coming up especially after the COP summit and so on. So we are really looking for a very exciting time ahead. So our team is very much geared out there. So I'm pretty much into it now. Yeah.
Great, thanks, Sanand. Okay, maybe we can move on to Mr. Samir now.
Thank you, Ashwati. So thank you, everyone, and good afternoon. So I'm Samir Shah. I'm the managing partner at Peak Ventures. So we run a sustainability-focused fund called Peak Sustainability Ventures Fund. And our area of investment is clearly climate. And we have 4 verticals within which we invest. One is new energy. The second is agriculture. The third is water. And the fourth is known as climate tech, which covers plastics, data analytics, biodiversity, and others. So, our focus is primarily climate. And I think we try to work with entrepreneurs who are looking to solve tough problems. I think the space in climate is, in our view, very different and attracts a very different kind of entrepreneur than someone looking to solve a consumer platform problem or a fintech problem. I think this requires a lot of deep thinking, a view of externalities, a view of connecting various dots. And solutions are also complex, which means that entrepreneurs, and I'm saying this because there are many entrepreneurs on the call, have to be somewhat deep thinking, patient, and work with complexity. So even in our firm, we work with complex situations. We are not looking for complexity, but complexity doesn't deter us. And our model is to work closely with the companies we are invested in to see how we can unlock value and grow and make an impact which is not only for the company itself, which is of course a requirement, but has significant positive externalities in terms of saying how does it support, for example, cleaner energy? How does it support net zero? How does it support better topsoil? How does it be invested in plant protein? How does it support plant protein? How does it support data? So this is how we are thinking. Even in water, I mean, we have a company that provides safe drinking water to over 800,000 people. So that's something that we are kind of proud of. And coming to today's topic, Pratap, our first investment in data tech in climate was in 2014. And we'll talk about that company, as the conversation progresses. But clearly, I think conversations like this are very useful, and we'd love to participate with you in this to just share our thoughts, ideas, and see how we can, further build this ecosystem on climate. Because I do think that, to solve net zero issues, and I would think broader solve natural capital issues. I mean, net zero is a microcosm of the whole climate problem. You need everybody to participate, large companies, government, and startups, So I think the ecosystem needs to be built, and we are glad to be a part of it.
Thank you. Thanks, Mr. Samir. Mr. Gopalan?
Hi, thank you. Good afternoon, good day, everyone. I'm Gopalan. I am heading the AI Center of Excellence in Intel India. We are part of the broader artificial intelligence group in Intel. Our mission within Intel is to bring AI everywhere. And when Pratap approached me about, hey, would you be interested in being part of a panel discussion that we talk about AI for climate, I felt that truly now, I'm taking AI everywhere beyond the confines of the corporation within which we are implementing. So that way, I felt this is like a logical next move to broaden my perspective beyond the boundaries of a corporation. What do we do within Intel is we look at complex problems which are amenable to AI-based approaches and see how we can bring value to the business by solving these problems, or to provide insights which are a lot more powerful and something that the business can tap into. So we work with every vertical within Intel. So whether it is supply chain, marketing, finance, or sales, or product development or validation, we work with all of these verticals within Intel, and then create reusable assets that which we develop for, say, for example, for one of the vertical, we then try to scale it to the enterprise, the whole enterprise. So, for example, Sanand, you spoke about forecasting. So you could be, developing a forecasting model for supply chain, say to predict demand or to predict a specific seasonality in a particular period. You could be applying that to finance as well. You could, you may want to forecast, say, working capital. You may want to forecast, your treasury, needs. So if you see, you can develop core models and then, you can scale it. Build once and then scale it in multiple places and multiple domains also, right? So I see a huge opportunity in the same way, even in the climate space, forecasting in multiple vectors, right? Whether it is transportation, electricity, or any other vertical where, where we can bring the CO2 impact. Forecasting algorithms can be, develop once and deploy in many places, right? That's the advantage I see. We will talk more about it as we dive into the panel discussion. But that's the excitement and passion I bring to the table in terms of AI that can solve both in the industry context as well as in the climate perspective.
Great, thank you. Thanks, Mr. Gopalan. So I will now hand over to Pratap, who is the founding partner at the collective, and he will be moderating the session today.
Great, thank you. Thanks, Shruti. This is great to see this panel. Thank you first for your time, for the panelists. This is out of your support for the ecosystem. It was an ask from us. And thanks everyone else who has joined this panel. We do support clean tech startups quite a bit, but there is something happening and special about data. It could be extremely powerful, scalable, catalytic in many ways, because we have such a big industrial base or big IPP assets, or renewable assets on the ground, etc. So this panel is actually interesting. We have someone from industry, investment, and an entrepreneur as well. It's such a great mix for this panel. As you know, our focus at Climate Collective is entrepreneurship, startups in particular. So we'll try to focus the questions particularly on that than AI in a more broader sense. For those who do have questions, do type it in, and after at the end of the 45 minutes or hour, we'll get to the questions as much as we can and how much time we can keep of these three gentlemen. I just also want to add, our climate data program is of interest. You should check it out. If you are an entrepreneur here, or if you want to support as a mentor or otherwise, do check out the programs that are coming out. You can connect with Neha here from Climate Collective, who runs that program. So thank you. I'll just start with just a few questions just to get the ball rolling, and then before we open it up to the panel. Mr. Gopalan, if we could start with you. You have a background, of course, on data AI, not necessarily climate specific. In fact, this is more of a newer domain. Maybe I could start with some of the challenges, especially technically. And what I've seen is the interesting AI solutions, not all of them, but many of them, are complex. They deal with supply chains. They deal with maybe subnational parties like city municipalities, etc. You're talking about data crossing boundaries, data privacy issues. What are some of the challenges we face in looking at data solutions when we look at these platforms for an ecosystem or that cut across natural company or organizational boundaries?
Yeah, Pratap, when you spoke about how the solutions that we develop, say, in the supply chain space, right? I was just thinking how it can be applied from a broader perspective to the transportation sector, because close to about a quarter of the CO2 emissions are contributed by the transportation sector when we talk about climate, right? In the transportation sector itself, if you look at one of the areas which is both inbound logistics and outbound logistics, essentially a company procures to run its operations, and then it sells and distributes the produce through third-party logistics providers. We call them as the 3PLs. So if you look at this sector, there is a huge opportunity, and we know very well that transportation contributes to about a quarter of the CO2 emissions. Given the fact that this is a good opportunity to bring significant improvements, one of the opportunity I see is this is a fairly well-known supply chain problem, and I'm not fully sure whether corporations are sharing this particular area, but that's where our efforts could probably open the opportunity for the corporates to think about, right? This is around freight consolidation and scheduling. Even Sanand was talking about scheduling, right? It's not an easy problem. A computer scientist called this as an NP hard problem. So when we talk about freight consolidation, that's a great opportunity. And today, it's not something that the 3PL, third-party logistic providers have not solved. They have solved. But the beauty with the AI is that it can scale with the complexity. Traditional algorithm may not be able to support, but AI algorithms are a lot more capable to scale with complexity and still provide meaningful solutions, even if the scale increases, right? So that's one area I was thinking, where corporations can share what they have done in terms of freight consolidation, or even 3PL providers can share across industry and across industry verticals on how they have solved. Here, data is not really an issue because, for example, if you look at, for example, for the case of freight consolidation, typically, what are the factors that you need to do freight consolidation? It is essentially the volume of the material that you're shipping, the weight of the material that you're shipping, the source and the destination pair. If I'm shipping from, say, Shanghai to Los Angeles, that is, the source is Shanghai, destination is Los Angeles. So the source destination pair is something you need to know, and the service level agreement. What is the 3PL, what is the service level agreement the 3PL has got with his customer? So based on that, they typically consolidate the freight so that they don't ship a container, ship a cargo, send a cargo ship which is half empty or partially full, right? Because you're now burning fuel with which is less efficient, right? It is better if you fully load the ship and then ship it from Shanghai to Los Angeles instead of doing a partial truckload. Now, these, I just mentioned about few factors, but you could even consider environmental factors and the dynamics around the fuel prices. You can consider a lot of these factors and come up with a fairly sophisticated algorithm that can solve this. But the way I am thinking where the broader industry can help in reducing the overall such inefficient operations is sharing the techniques that a particular 3PL provider or a corporation would have done to solve this and the factors they have considered. Because the data is fairly available. It's not something very specific to a corporation. Today we know the shipping time it takes from Shanghai to Los Angeles. And when they do slow steaming, that also we know. Because typically, shippers or shipping companies adopt a strategy called slow shipping when the fuel prices are high. So your SLAs could get impacted, right? So all this data is pretty much available. So this is one area I think, where the models can be shared so that, companies can leverage from it and then help ensure that, optimal usage of the transportation lanes and the facilities are arriving.
Right. No, that's very interesting. Can I just ask a follow-up question? What you said at the beginning, I'm not a data person. I'm kind of a physical, solar guy. When you said AI can grow with complexity where traditional models don't, is this something that can you illuminate us more on this? Why that's so, or is it still a work in progress? Is it in terms of
no, not really. Not really. If you look at the evolution of the AI techniques, if you look at it broadly, I'll call one of the paradigms in AI is known as classical machine learning. Right. This is a field that has been created by the contributions from statisticians and mathematicians who have come together and then created these algorithms. The next paradigm, which even Sanand kind of indicated, is the deep learning techniques, which are extraordinarily powerful in crunching massive data. Whether it is text-based data or image-based data, or even structured data. Text and images, typically we call them as unstructured data. Structured data is like your classical Excel sheets and SQL databases, right? Both today, when it comes to complexity in terms of maybe I'll put it this way: when we talk about volume and scale, today these paradigms, deep learning techniques, in case of image recognition, in case of prediction algorithms, deep learning techniques can scale much beyond what classical algorithms can do. In the same way, when you look at text-based techniques to handle or process text-based data, today, there is a stream of algorithms which are, we call them as natural language processing paradigm. But you also have what is known as the transformers that have come. These can handle much bigger volume of data and a higher scale of data. That's how the AI techniques can be applied based on the volume of data.
Right. No, excellent. In fact, last year we did a quick survey through a partner on AI ML students in university, and we saw that 40% of them had an interest in applying their skills they're developing to impact. So I do hope more do come in and we see this come into our ecosystem. Thank you. Maybe I'll now move to Mr. Samir. We'll just hold off on questions a bit, if that's all right, Narayan, just until we get, yeah. Now, Samir, you have a different angle. You are looking at clean tech or climate tech across the board. You're looking at data solutions. You're looking at, hardware or physical invention, et cetera, or even beyond. Most of us know that one reason for venture capitalists to look at data solutions or startups is the asset light, aspect. Can you give us some, as an investor, some other insights that you see on data that excite you? What is it in the power of data, especially in relation to climate?
Sure, no, absolutely. Thanks, Pratap. So I think before I get to the example, I will just tell you how we think about data. So you talked about data, which is important, data analytics, which is equally important, and AI, which is also very important. But we start off with the principle that you cannot manage what you can't measure. So where data comes in is to say that, look, can we offer a measurement tool, or can we offer a tool that allows people the ability to run the diagnostics to take action? And in certain instances, the tech itself takes action about it. So we are supporting companies that are doing a lot of work in data and data tech, because this is actually going to be sort of going forward. You're seeing software running hardware, whether you look at cars today, which have multiple chips. The chip industry never was connected with cars, and now you have cars not being manufactured because there's a chip shortage. So you're going to have smart machines, and I think data and data tech is important. However, one has to be very careful about how we use data, because there's an old IBM saying, garbage in, garbage out. So we met a company in data which was telling us that they're putting sensors in the field every 6 inches apart and collecting all this data. I said, you're wasting people's money. 6 inches apart, you should put one in an acre. Just because you have more data, just because you're crunching more numbers, doesn't make you more sophisticated. So that is what I mean by it has to be selective, and you have to think through what you're doing in terms of how we are applying data. So one of the companies which I alluded to earlier, which we invested in 2014, is actually earlier, it was called Hst Solar. Now it's called Hst Powers. So this is a software platform which actually provides optimization solutions for large-scale solar plants. So they use data from NASA to get the irradiation levels. They use the topography of the land. They use the modules that you have, and they come up with a blueprint for how the spacing should be, how you manage the shading, how you should lay the panels. And then when we invested in 2014, it was a small company. Today, their software is being used in 100 countries. It has been used over 7,500 projects, and it has optimized or worked towards optimizing over 300 gigawatts of projects. So you can see what scale software can bring. You can see the scale at which a company in California can impact the world. And if they are able to improve the productivity by 1% or 1.5% by 2%, on a standard, on a solar plant, the efficiency is about 24%. So if you can improve it by 2%, but actually getting 10% more result from the same hardware that you have installed. So this is a classic example of how software is, in a way, influencing the hardware solutions. And this is the way we think in terms of saying that, look, can data be brought in as an enabler to assist people in effectively managing the problem? There was one other example I wanted to give and then stop. The second comes from mobility. So in 2007, by the way, in both of these companies, we sit on the board, and we clearly, one of the things I should have mentioned earlier is that we like to influence outcomes. We are not passive investors. So the second one is Ion Energy, which has the distinction of being the first company in India getting monies from the Amazon Climate Fund. But they are, when we looked at EVs, we said, look, let us look at the battery and reconstruct the battery. So when we deconstructed the battery, we said the BMS is actually the space, or the battery management system is where one has to focus. So these guys are making battery management systems, and they have built a platform called Edison Analytics, which looks at how the battery performs. And this is one where the software is actually influencing outcomes, because it is able to improve battery life by actually 6 months to 1 year. That's what customers have said to us. And secondly, enables thermal management, which means that you need good battery management solutions to prevent the fires we are having in EVs. And you cannot compromise on how battery management systems or software work. So this is all, in a way, integrated to say, look, can we have smarter systems to improve efficiency, prevent fires, and get more predictive information? See, as Mr. Gopalan would agree, the AI would kick in once you have more data. So once they collect 3 years of data, there will also be a lot of predictive maintenance that the software can do. So these are all signs that tell me that data is going to be integral to supporting climate change, not only net zero, but the broader aspects of natural capital.
Oh, yes. I definitely agree with you. I do have a question, though, just from the investment point of view. One of the one of the benefits of data from an entrepreneur, of course, is the smaller amount of capital. So the entry barrier kind of reduces. But now from an investor point of view, how do you look at, as a result, defensibility? Once maybe with Sanand as a trailblazer in one area, others see the solution and try to replicate. How do people build this into models like this?
So I think, look, we start with the premise that the shelf life of any software solution is very limited, and you have to keep running to stand in the same place. So that is a starting point. But the fact that there is no patent doesn't scare us. I think we work with very strong companies. So this company, HST Powers and Ion Energy, are examples of how we have thought about these companies. The third one, which I should mention because that is also a global company, is a company called GIST. It stands for Global Initiative for a Sustainable Tomorrow. So they have now been selected by MSCI Global as their sustainability partner, analytics partner. And we are actually doing calculations of actual measurement of impact for the world's top 100 companies that are their clients. So this tells you that if we have a team of 80 people sitting in Mumbai and now in India because of some people working from home, providing solutions in data to the world, those are the companies to back. So I think it goes to the skill of the investor to say, let's find the right companies, avoid the companies that are putting sensors every 6 inches in the agricultural field, and find the people who are solving tough problems, complex problems, and have the skill set to do it. Because globally, I think, we never think of patents as being a real long-term advantage. It's the skill of the entrepreneur, the focus he has, the scalability of the product, and the solutions that they bring to the table that are key drivers for us in terms of our investment thesis.
Right, great. Well, thank you. I hope that the more data solutions come to your fund and to all of us to look at. I think it's a great strength of India to look in particular in data. That's great. Thank you, Mr. Sanand. You have been very modest in saying that the journey starts now after joining required by Renew, but in fact, you have achieved quite a bit of success. We all know that startup journey is not easy, and it's almost always harder than what it looks like from the outside. So I do want to look at sort of some of the challenges you faced, especially when you start looking at the climate use case or the energy use case. How difficult was it to approach your first customer with a data solution? Were they a little reticent to work with a third party in this area?
Yeah.
Were they open to experimenting here?
Yeah, absolutely. I mean, interest was always there. That's like, from experience. The first problem that we picked up was the IEX price forecasting problem. And the story around that is like, we just gathered the power data, and the IEX price data is publicly available. So we started applying our engines on, and started pitching to various traders and IPPs and so on. So during one of our pitches, like the founder of Hst Solar, he looked at our engine and he said, why don't you do solar forecasting? And if you are willing to do solar forecasting, I'll give you a pilot with one of my plants. And then and there, we were like, sure, why not? We'll just, data is data. So just, give us the data and we'll get started. That's how Acme team helped us out. They gave us the data and we ran the pilot, and it was successful. So that's on the IPP side, and essentially on the demand side as well. Our first customer was BSES Rajdhani in Delhi. And they also started off with a similar sort of a theme, like, okay, what can you do? And we were like, okay, this is the price forecasting, and no, we want to get into like demand forecasting. And then they gave us the benchmarks, like this is the accuracy levels you need to hit if you really want to sort of stand in this market. And if you are willing to take up this challenge, we can sort of think of giving you a pilot, and we just agreed to it. Fortunately, in both the cases, what I would like to sort of highlight here is that an internal champion or an internal sort of a starting guide is required in a customer. If you get that kind of a customer, and incidentally we got them, you can actually get the guidance, the benchmarks, the challenges, the problem statement, and that is what we essentially as entrepreneurs need. And that really feeds into our brain. Okay, like, this is what we need to attack. And we did that. The data challenges with private players like DSES and Acme Solar were not there, mainly because they were quite supportive. They wanted to solve the data problem, and they wanted to solve the accuracy problem, especially because DSM regulations were coming into the renewable space. So we did that. But then when we actually crossed over into the government space, that's where the real navigation problem starts, at least in the Indian part of it. So basically, going through the tendering process and qualifying for that. So initially, the qualification criteria were very sort of biased towards the bigger players and against the startups really. But then these things changed, post in the recent years, and we started winning tenders based on the quality rather than the scale of our company. That really helped us out. But rightly put, gathering the data is the main problem. 60-70% of the effort goes in just gathering the data, collecting it in a format that we would like to feed it to the model and so on. And then the rest 30% is just like iterations over the models and trying to improve it over time. But the first experiences with the first customers, I think that's really crucial, because that's a lever you get in the market.
Right.
Yeah.
I think I agree with you. I'm happy to see that the acceptance to pilot was relatively straightforward. It's not true generally across clean tech.
Yeah.
Maybe in certain, especially some of the FMCGs have a much longer process.
Yeah.
Bringing in solutions, but maybe in the case of data, there could be a faster piloting, which is the secret, of course.
Yeah.
A good pilot signals a lot to many. Well, I do agree with you. Internal champion. This is a challenge for those in the startup ecosystem. Is many people will see your product from let's say a corporate or a government, but someone has to push it.
Yes.
And Rishi on our team here runs Electron Vibe. Maybe you've heard of it. It takes internal champions from discoms to work with energy startups to make it more likely to receive a pilot. And Rishi, there's quite a bit of data and energy startups in our program as well. In fact, it's like digital twins and of course data analytics and others that are coming. But you're right. Maybe I could just, if there are questions, please do put it in the chat, or you can always just, I think we can open up to questions. Ryan, I believe you had a question earlier. You're on mute.
Yeah, hello. My name is K. Narayan Pai. Yeah, so I'm alumnus of IIT Madras and I'm based out of Goa. Yeah, so I'm the founder of Insti Profile Private Limited. Yeah, so we never actually went on to solve any climate related issues. I mean, we were doing something else. Yeah, but we finally landed up with a product that has relation to the climate, I mean the carbon footprint reduction. Yeah, so it's a group building software, automatically builds a group around a institution, whether it be a college, company, etc., based on smart login algorithm. Yeah, so it's basically brings the people together in their groups. I mean, like all the students are in their group, all the company employees are in their group. Yeah, so so two of the features reduce this carbon footprint. So I just wanted to, I mean, if that's it. So yeah.
Is there a question to the panel, or is just sharing some?
Yeah, so I just wanted to showcase, I mean, if you're interested. Yeah, so so the usage of the software, right, has direct relationship. We have to do a case study of how much carbon footprint we are saving. Yeah, based on the usage of this software. Yeah, so if we reach more than 1 lakh users, I mean, or some, if it is at least 1 million downloads, something. Yeah, so that is huge use savings.
No, great, thank you. It's great to see.
Yeah.
Thank you. It wasn't really a question for the panel, but it's definitely an entrepreneur.
Yeah, just one comment on that. Actually, is that, look, one of the types of, I mean, what he has highlighted is behavior change, which means that effectively, in addition to government policy and corporates, it is for everyone to participate. So any such software that promotes, allows, or enables one to measure the impact of behavior change on climate could be something that we see happening in the next few years.
Right. No, absolutely. There was a question from Raj. We know Raj. Raj, are you able to go on audio or video?
Yes, certainly. Hi, Raj here. Pratap, thanks. So thanks for the excellent suggestions and inputs from the panel. And my question was at two levels. One is the pricing part. So yes, we have a platform. Yes, there are 1,000 transporters sitting on the platform. The question is, in a price-sensitive market like India, how do you maximize the value to the transporters, which also do things like load consolidation, Gopalan, which you refer to, and how do you charge for it? Because the load consolidation could end up saving several crores a year to a company, but how do you monetize that for yourself to be to scale up your own revenues?
So Raj, you are getting into the space of supply chain contracting. How do supply chain partners arrive at contracts so that the gain that they get from supply chain optimization efforts are shared in some mechanism, right? Maybe equally or proportionately, I don't know, it depends on the contracting part, but that is the area you may need to look at, essentially how the supply chain, I would call them as for lack of better words, the master, supply chain master is the one who is fundamentally, orchestrating the whole supply chain, and companies provide inputs to them, and then companies take output from this supply chain master and then deliver it. So supply chain contracting is the key element here, where based on the collective efforts of the supply chain partners, you are deriving some value. Now, how do you share the value across the partners? That is actually a contracting aspect of the supply chain rather than a technology or a technical solution.
Right.
But
well, if
thanks.
I may ask a question there. By the way, Raj was part of our AI for Climate program, an excellent AI startup in climate himself. We've had challenges in India around like energy efficiency contracting. We've had some really large, I've seen personally really large clients who would change baselines, and because the idea of sharing costs it's sometimes very difficult for contracting. Now, in the case of AI, I think the question for Raj is what if your impact is, for example, extremely amplified in terms of bottom line for someone? Is there an effective way to contract where the startup or the solution provider can share in that? Or does this cause other problems when savings come in? And because oftentimes you are talking about multiple games, renewals, and sometimes even pressure for repricing. How does a startup effectively look at contracts, especially data solutions that may have this kind of large impact and as maybe multi-core saving to an individual company? Any specific challenges? Yeah.
Sanand.
Yeah, I mean, we have seen that because generally, like in fact, I can give you an example where in the state of UP, we did demand forecasting and the entire energy procurement optimization for them. Obviously, that was a fixed cost tender for 3 years, and essentially, but the gains out of this software, out of the demand forecasting accuracies and so on, we were able to save north of 500 crores in a year for them, which essentially meant I mean, obviously that's a very high impact for the end customer, but generally when you come to a SaaS kind of a model, you are very I mean, generally the clients will never agree to a profit sharing. They will always be like, that this is your flat price model and this is how it will run. So it's very difficult to sell that way. We tried doing that for IPPs as well, where we said that, okay, we will take the risk of the DSM, the DSM penalties implied, and we will take the risk and we will actually play on our accuracies in the model. But then that becomes unviable to a certain extent because of the volatility in the weather and so on. So there are risks involved, and for a startup like that with very low sort of shallow pockets, really, it is very difficult to take on that kind of a risk, and we settled in to a flat pricing model most of the times here.
Yeah, I agree with you, Sanand. I have seen not in the AI space, but in enterprise resource planning space, right, where companies ventured into the space of profit sharing and then they actually collapsed. So, a safer way to start with would be a subscription-based model, so that you are just, allowing your services to be consumed regardless of the profit your customer is making, unless you get into a custom solution, right? You are, you're going in deep and then understanding the enterprise and figuring out the data models and developing a custom solution.
Yeah.
I wouldn't recommend otherwise, getting into the profit sharing space,
Yes.
especially if you are a startup with a shallow pocket.
Yeah.
Got it. Thank you. Thanks, Anand.
Welcome.
Anyone else have questions?
So just, just does my software, does it, come under your preview? Like, can we approach Climate Collective? And like, so that's what we want to ask actually.
Oh yeah, sure. You could also just call us directly. This we not just us, but there are others who support startups in early stages because it is a difficult journey even for the most successful ones, how close, I'm sure most have said, let's quit, even when they succeed. So do apply. We do have programs, early stage programs, and specifically around data that's coming up as well. Yeah, absolutely. And you can connect with Neha here on the team.
Okay. Okay. So we have pilot running in IIT Madras campus actually. So it is running there and showing the difference actually. Yeah, we're measuring that kind of. Yeah. So we want to apply to. I mean, we release the product to the general public. Yeah. So that's what we need some support. Yeah.
Absolutely. No, we look forward to learning about it. Thank you. Great.
Sure. Nice meeting you.
Great. Thank you. I do have one more question myself, and this is actually to Mr. Gopalan, and this is a more of a technical question. What are some of the challenges, and maybe this is for also Narayan and others who are here developing, what are some of the major challenges you've seen when people are developing AI solutions and when they try to come to the market? Like in our experience, there isn't that strong a customer voice in product development in the startup world, at least, partially because of access, resources, and other reasons. And to some degree, even when they finish their development, they're starting to talk to customers. But it would be nice, as you know, to understand the customer much earlier in the product development cycle. What are some major things, in particular in AI, that you've seen that we could learn from?
Oh, yeah, it's a great question, Pratap. In fact, this has been, one of my, the mistakes and the learnings when I started the AI Center of Excellence. So this is something very close to my heart. So one thing we need to remember is AI applications are not IT applications. They are extremely different. If you look at Google search, that was launched way back in 2003 versus the Google search today, it has evolved significantly. The algorithm has learned from the data and it has matured over a period of time. IT applications are sedate, unless you do some, enhancements, they are pretty much, stable and sedate, right? You know what the outcome that you are expecting, and you will get it from day one. Whereas the AI algorithms, they learn from data and then evolve over a period of time. That's one of the big difference, which you got to upfront set as an expectation with your customer. For example, Sanand has been speaking about forecasting, right? What is the tolerance for the accuracy that a customer would expect? And if you are, suddenly feeding a data from a totally new district in UP, how the focusing algorithm will behave. So, these are some of the issues that you will see. Coming back to tight partnership with the customers during the life cycle of an AI project, right? I call this as a ballet dance. Right from what I say, need expression or a wishful thinking when the customer starts, right? From that point till you deploy a solution, the AI team, it could be a startup or it could be a center of excellence like mine when I am serving my internal customers, whoever it be, there is a customer there. So these two have to work in lockstep, whether it is, I in fact came up with a framework called the AI funnel, this is because of the fact that Gartner talks about this interesting data point, which is if you're pursuing 10 ideas, they guarantee that 80% of the ideas will fail. That is the funnel, right? It's like the classical product development funnel. So I call this the mortality rate of AI projects. 80% is the mortality rate of AI projects. Given the fact that this is going to be the eventual reality, when you are pursuing 10 ideas, you are eventually going to see only 2 of them seeing the light of the day. You got to be super sure on when to pause these ideas and which one to pursue. So if you look at this whole framework that I have developed called this AI funnel, so you start with the business case and then you formulate it as a use case, and then you see whether you can first of all apply, is this idea amenable to an AI based approach? That is the most important thing. A lot of times what we do is, since because I have a hammer, I start looking for nails. That's not the right way. Since because I have a shiny toy called AI, we should not be solving every problem using AI, right? Probably there are simpler techniques, so go for it. If there is a simplicity, is the, I call this as the principle of parsimony, right? go for the simplest solution. If not, look at the next complex solution. So the tendency is generally, oh, I have tons of data, like Samir was saying, right? If you're collecting from every 6 inch of your paddy field, the sensor data, obviously you have to use some deep learning technique. But is that really warranted? That is the first thing. When we talk about these fancy techniques, right? That is one issue. And once you get from a business case to a use case, the second thing you need to do is, now that you are very sure that AI technique is the right way to go, that is the best way to go. Say a prediction paradigm, right? Whether it is forecasting or predicting an outcome, then you are very sure that there is a prediction paradigm I can apply. And then now you are very sure that you are sitting, in fact, on an AI use case. The third is the data diligence, right? Do you have, a lot of people say I have data. Sometimes they miss the fact that do they have labeled data? A lot of time we run into that issue. Even in the, I'm sure, not just in corporates, even outside, whether it is data from the government or any other body, you will see this challenge, right? Do you have labeled data? What is the quality of data? What is the level of access that you can get to it? These are some of the important aspects we consider as part of our data diligence practice before we mature this AI use case into a proof of concept. Then from proof of concept, you sit with the customer and then see whether the algorithm's output is in sync with the customer expectations. Then, you do a pilot. I call this as a New Zealand of your project, right? You do it in a controlled way, and then see whether the output of this algorithm is in fact, is it in sync with customer expectations? Do they really trust the algorithm output and take a decision? That is where the litmus test lies. Do they really trust the algorithm output and make a decision for their business, right? Or for running the operations of their enterprise? Then the pilot has qualified to become production. I call this as a cloud burst, which is now that you are out of your New Zealand, you're sure that your pilot is successful, you can do a cloud burst, which could be for a geo or for a certain region of your scope, and then you scale it beyond that. This is the it's a quick overview of the AI funnel framework, right? This is what we do when we develop AI projects, or when we take an AI project from ideation phase to deployment. And in every phase there is a entry, test, validation, and an exit criteria, right? So that you are sure that this is no more an idea that is worth pursuing. I was talking to you about the pass versus pursue criteria, right? This we apply in every stage of the AI funnel, so that you don't end up pursuing ideas just because they are great or the customer somehow wants it, right? We should have that emotional detachment to say that this is no more worth pursuing because of lack of these criteria. This is why we are drafting this. That's how this is one handy framework which I felt that as an AI practitioner has come very handy to us when we pursue, when we look at engaging with our customers and continuously communicating to them about in which stage we are in and whether we are going to pause or pursue.
Right. No, thank you. Yes, product development sometimes, especially in the startup world, is done differently for other reasons, partially from either lack of experience or time pressure. My ex-wife used to work at Visa, and they would not spend on a product until 2 years after customer research and validation of so many things, delivery, etc. It's not a luxury often that startups can have, because there's a little bit more of a back and forth needed to maintain momentum, but it is things we can learn from. I can just add one example. There was a startup I came across that looked at measuring risk in bank portfolios, real estate, developed a product and tried to go to the market, not realizing when you're telling a bank that you have a $500 million loss in your portfolio based on my tech solution, that it's not first going to be readily acceptable. There's many things, especially in the areas of climate and risk, that you need to bring in a better understanding of how the client looks at risk. How will they trust? You mentioned trust.
And how many in those entity will view this outcome in negatively because their job could be at risk? Right. When you talk about $500 million risk, we don't know how many people's job is at risk when this data is exposed.
Yeah. I think, Pratap, to add to your point about the banks, There was a CEO of a large bank I met in Singapore, and they were worried about the risk of actually seawater rise because their mortgages are in Singapore. There was a company in California that is actually modeling potential rise in sea levels over the next few years based on multiple factors. And when you get into those level of complexities, you need data engines because you need to run probabilistic scenarios. But it is coming close to the financial CEOs as well, because climate risk and climate opportunities are also getting closely tied in to financial outcomes as well.
Right, absolutely. I think we are getting out of time. Maybe I could end with one last question in particular, Sanand, as a climate tech entrepreneur. So Sanand, as an independent startup, making the decision to be acquired by Renew, of course, it is an amazing company, a dynamic company, but it's not a startup. How has it been different working with or through Renew versus that independent life you had before?
Actually, not much different at all, and that is thanks to the Renew management. Because we decided to get acquired mainly because we were anyway looking for a fundraise at that point of time, and we wanted like a strategic investor who would actually make like our careers grow into the same sort of a domain later on. When we spoke to Renew, they also had a digital strategy and a very serious digital strategy, especially targeting the net zero and the renewable, the carbon emissions kind of responsibilities. So that way we saw a good synergy between Renew and ourselves. We were doing a very small sort of software kind of ecosystem work, but then these guys are the ecosystem. So they were, we thought that their digital strategy and probably our contributions would really help us learn more, grow more, and take up more challenging problems in the sector. So even today, they let us make our own decisions. They give us the independence that as a founders we had when we were when we were independent. So that independence we are still enjoying, and a very forward looking company, and that's why you are seeing me here even today after 2 years. So otherwise entrepreneurs are like okay, I've sold off, I'm done, I'll move on to something else. But till now I think it is pretty exciting for all of us out here. Yeah.
Right. No, great. Thanks. Yeah, and it seems like a great fit to work with a group like Renew, who could propel your solution quite far and wide. Well, I mean, thank you. I think we're out of time. I do want to thank the panelists again. This is something that our ecosystem really appreciates, to hear people from, in this case, such a diverse background from the investing industry and even the startup space, a success that we all look up to and showcase as well. So I want to thank all the panelists again for your time. For those who are interested in either data and entrepreneurship or even just climate entrepreneurship, do check out the programs coming out from the Climate Collective. We do have another data challenge coming out. This one is more for university students. I think targeted launches in July. It's on, I don't think we've set the problem statement yet, but it's about to be defined. Neha, you can reach out to Neha Shimoli to learn more about the program. For those others, like Narayan, the Launchpad program may be something you can check out. The application is still open for July. And for those startups who are looking to raise money, we run this Angel Network pitch events on a monthly basis. Ashwati and Pooja here, you can reach out and see what the next theme is. I think the next one actually is in plastics, plastic waste in early July. But we'll have something in August and our big investment summits in October. So, and thank you all for coming. And I'm going to hand over to Ashwati now to close.
Thanks, Pratap. But I guess you covered it all. Thanks everyone for being here and attending the talk. And thanks again to all of the panelists. Thank you, Mr. Sanand, Mr. Samir, and Mr. Gopalan. Really appreciate you taking out the time. And it was a super insightful session for all of us, I'm sure.
Thank you. Thank you, everyone.
Thank you, everyone. Bye.
Pooja, I think you can stop the live stream.